welcome everybody to the 18th edition of LM's Weekly Wrap, our weekly program to cover all the events that have occurred in the market, the international developments, the domestic developments in the markets, and their implications on the various sectors as well as the stocks. As usual, we start with our coverage of the international global markets first. In the global markets, we've seen some positive news flow at last. We've seen the commentary, much awaited commentary from the US Federal Reserve officials, and most of them are unanimous in their view that the pace of rate hikes needs to slow down a bit. And this has given the much needed relief to the markets across the globe. So whether it is the US 10-year benchmark bond yield, or whether it is the dollar, or whether it is the crude prices, all these three factors have softened, and that has given the emerging markets the much needed boost which is required. As far as the domestic markets are concerned, we have had a kind of free run in the markets in the last two couple of sessions, and we've seen that with the US markets kind of closed, the domestic markets are into virtually a free run. This is on account of the fact that, of course, the domestic earnings season has been quite good. There are some very positive cues which are emerging in the domestic markets. First of all, we start off, as we had discussed in the previous sessions also, that in the domestic markets, we have the earnings season which was quite good, the festival season which was quite good. We saw good amount of pent up demand into the system, and all that augurs well. Going forward, we have the Rabi season to look forward to. We have a very robust wedding season which has a huge multiplier effect on the economy. And this week we also had some very positive news flow with respect to the rural economy. It is being said that considering the fact that we have the muted demand, or kind of a very subdued demand which is there in the rural economy, the government is likely to give a big boost to spending in the rural economy in the forthcoming budget. So I think all this is going to augur very well for the prospects of sectors, rural facing sectors like FMCG, or cement, or two-wheeler related stocks, fertilizers, seeds, etc., tractors. All this could have a positive impact on these stocks. One another important factor which we need to take into account is the recent G20 meeting, where Prime Minister Narendra Modi ji has explicitly he has said that today's fertilizer shortage is likely to become a very big food crisis of tomorrow. So I think fertilizer stocks have also, after taking into account the comments which have come from the Prime Minister, we saw a strong up move in the fertilizer stocks also. So going forward, we need to see the valuations are looking quite compelling as far as the fertilizer stocks are also concerned, but we'll take that a little later when we go to the sectoral impact. Starting off now with the sectoral impact, which is of paramount importance to the market participants. First of all, we start off with the auto sector. Auto sector continues to remain in good health. The prime pick, of course, remains Maruti. Maruti continues to be in good shape, and we'll be having the monthly auto sales numbers also, so we'll look forward to that. Apart from that, we've seen some very good commentary coming in from Escorts Kubota. They had their analyst day, and the stock is doing quite well in trade even today. We have Eicher Motors, which continues to post a strong set of numbers. Their new launches have done very well. The export market looks quite good. Force Motors, having launched the Urbania, and I think once it hits the market, it's being tipped as the next generation tempo traveler of the next generation. It's being tipped as a good value proposition, so watch out for that stock too. So I think auto sector continues to be in good state. Apart from that, we have auto ancillary related stocks which are also likely to do well. With the crude oil prices tending to cool off, we are seeing good momentum in the tire stocks also. For example, JK Tyre, CIAT continue to do well in trade. They're expected to do generally well in trade. Apart from this, we have Amar Raja and Exide, which are also doing well. We had good quarterly results from them, and with cooling off in the commodity prices, likely to augur well for these stocks too. Next sector which we come to is banking. I think PSU banks have had a dream run, and the dream run continues. Although there is a risk element with them, but I think with credit demand, which continues to be very strong, we are seeing the frontline PSU banks continue to perform very well. We like stocks like Federal Bank, we like Karnataka Bank, we like City Union Bank. So watch out for these stocks. And apart from this, we like Bank of Baroda and Canara Bank in the PSU space. As far as the private sector banks are concerned, HDFC Bank continues to get lapped up by the FII buyers. The FIIs are extremely bullish over there, and we've had an analyst meet from Axis Bank, and most of the brokerages are quite upbeat over there too. Third sector which we'll be covering is cement. I think in the cement pack, Ultratech Cement continues to be the favored pick, and we continue to like certain stocks like JK Lakshmi Cement, Birla Corp, etc. Still hoping that the demand will revive in the cement sector from November, and margins are expected to pick up from Q4 of FY23. The fourth sector which we are taking is capital goods. I think capital goods continues to be largely muted in trade. Fifth is the infrastructure sector. Infrastructure sector, our prime pick remains Larsen and Toubro. We expect the stock to perform exceptionally well going into the next year. After this, the next sector which we are taking is FMCG. I think we are seeing good amount of action in the FMCG space. Our prime picks remain HUL and Britannia. Britannia, I think, has hit market share has hit a multi-year high, continues to be very, very strong. The body language of the company is quite strong. And apart from this, I think we could see traction also in Tata Global Beverages, because Bisleri is on the block, and I think the company is in the forefront as far as this acquisition is concerned. We have the IT sector, then information technology space, and I think yesterday, after all the comments which have come in from the US Fed, IT sector has been in good shape. Yesterday, the sector, the Nifty IT index was up close to 3%. We had the frontline stocks moving up in trade, whether it was Infosys or HCL Technologies. Both these stocks have incidentally raised their revenue guidance also. So I think continues to do quite well in that space. And after this, we come to the pharma sector. Pharma sector has been largely quiet in trade. It's been a mixed performance as far as the pharma sector is concerned. So I think it'll be better to have a wait and watch approach with respect to the pharma sector. Next is the metal space. I think metal has got a direct correlation with China, and China, with the record number of COVID cases, with COVID raising its ugly head again, I think the outlook for the metal sector continues to be a little bit weak. But I think the lifting of the export duties on the steel sector is a positive. At least it will have long-term implications for the metal sector. Finally, just to sum up, I think as I said, the strong performers of this week was the fertilizer pack. We need to see whether there's going to be follow-up buying over there. As I said, Prime Minister Modi giving the signal that fertilizer shortage is going to be the food crisis of tomorrow. So I think definitely fertilizer stocks will be in limelight on account of that. Defense stocks continue to perform very well. We've seen Mazgaon Docks, which has raised its revenue guidance, and we've seen HAL, Hindustan Aeronautics, which has raised its margin guidance. So I think this augurs well for the defense space. And we've had railway stocks which are performing exceptionally well. Rail Vikas Nigam Limited up in trade, and today trading at close to 71 levels. Just to say that during Diwali we have recommended this stock at 38 levels. So fantastic appreciation over there. That space continues to be very good. And PSU banking space, though I think the space is looking a little bit beginning to look little bit rich in terms of valuation, but nonetheless I think the dream run for the PSU banks continues. So a lot of other things to discuss, but of course time constraints do not permit us to go a little further. But we'll appreciate comments from your side. Do write to us, and we will revert back to you with our views. And we look to catch you forward in the next edition of LM's Weekly Wrap in the next week. Thank you everybody for a patient hearing. Thank you.